Nationally, the housing market indicators have been slow for several months now. There have been a few markets, though, that have defied the national trends where inventory has stayed tighter and demand keeps rolling in. Available inventory of unsold homes across the US is 40% more now than last year, but some markets are just starting to lift beyond the pandemic lows. It was the second half of last year when rates started rising again. After June of 2023, mortgage rates climbed from the sixes into the sevens on the way to 8% by October. So mortgage rates are higher now than they were 6 months ago. They are higher than last year. They are higher than 2 years ago. And consumers can't help but feel it. We continue to see the slow sales as a result. And as we move into July and August this summer, will we finally move past this period of rising mortgage rates? And how quickly will consumers notice? Next week, Thursday, July 18th, by the way, is our monthly webinar. If you're not signed up for this one, I recommend you go grab your spot now. It's a real pivotal moment in the data. The second half of the year is kicking off, and the story about which markets are leading up and down is shifting. So we watched Florida lead the slowdown for most of the year, and I'll show you why and where those assumptions may be changing now. So there's a link in the description below to register for that webinar. Click that to save your spot. Those are limited to 1,000 attendees each month, and we get way more than that who want to join us. So click that and save your spot. So at Altos Research, we track every home for sale in the country, all the pricing, all the supply and demand, all the sales, all the changes in that data, so that you can understand the changes in the U.S. housing market immediately as they happen. I'm Mike Simonsen. I'm the president of Altos Research, and let's take a look at the details of the U.S. real estate market as we're now in the second half of 2024. So available inventory of unsold single-family homes in the U.S. rose by just over 1% this week to 653,000. There are now 40% more homes on the market across the country than a year ago. In this view here of inventory trends for the last decade, you can see where we are relative to where inventory of unsold homes used to be. You can also see at the far right end of the chart the steep climb. Inventory is up 1% for the week, and it has several months to climb still. So you can also see that in the pre-pandemic years, it would be common for inventory to peak at the end of July or August. I've marked 2019 in the chart here. So over the past decade, each year with low rates would lead to fewer and fewer home sales. In the past 2 years, we've had rising rates and rising inventory. It doesn't seem like we've found the peak in rates yet, so we have to assume that inventory will keep climbing. Inventory is rising everywhere in the country. Every state has more homes on the market now than a year ago. Even in places like the Northeast, which has shown the least inventory growth, those states are now accelerating. Massachusetts has 35% more homes on the market now than a year ago. Massachusetts and New York, for example, are still just coming off the record tight markets of the pandemic. But that trend is obviously changing, finally. And in the webinar next week, Thursday, July 18, we will dive into the states and a number of the local markets, and the most notable data is slowly shifting away from Florida to other parts of the country. So join us for that webinar next week. The new listings data, and when we look at the new supply hitting the market each week, we can see the same trend we've had for a few months. There are more sellers than a year ago, but still not a lot of sellers. 71,000 new listings for single-family homes this week, unsold. There are another 16,000 new listings that are already in contract as immediate sales, so that's 87,000 total sellers this week. That's 12% more sellers than a year ago, which is right in line with the trend for most of the year. We have a few more sellers each week and just about the same number of buyers, and therefore inventory is growing. In this chart, each line is a year, and it's really easy to compare this year's low rate of sellers to last year's record few sellers. The dark line is this year, the red line is last year. Last year, the fact that sellers were staying on the sidelines kept supply low and ultimately pushed prices higher for the year. This year has less of that pressure for sure. The midpoint of the year has a lot of significance in the new listings data. 2 years ago, after rates first started their ascent, sellers were rushing to get to market. After the first week of July 22, there were 90,000 new listings and another 24,000 immediate sales, 114,000 sellers versus 87,000 now. So you can see that pink line here for 22. And at the time, it looked like we could see a flood of sellers. You know, inventory in the second quarter of 22 was rising at 3 to 5% per week. And it looked like that could continue, but those sellers stopped promptly in July 22, and you can see how that pink line drops in the second half of the year. And that was a clear signal that the market wasn't going to get too imbalanced. So what do we see now? We see that sellers are still restricted. Now, I don't see a reason for that trend to change in the second half of the year. Like, no reason for a surge. That means inventory will grow. We have 12% more sellers than last year, but it won't get too far ahead to create like a crash scenario, a supply-demand way imbalance that might create a price crash scenario. I don't see any reason why we would have more sellers in the second half of the year. And since the holiday weekend just ended yesterday, we'll see a drop in the new listings next Monday's data, but then the gradual seasonal decline for the rest of the year. There were 68,000 new contracts started for single-family homes this week. That's a couple percent more than last week. It's actually 8% fewer than the same week a year ago. I hate reporting fewer sales than a year ago, but that's where we are. That the sales pace hasn't really budged in 8 weeks in what normally would be the peak of the home buying season. So in fact, the sales trend has actually slowed in the past couple months. This week recorded 8% fewer contracts than a year ago. That bounces around a bit, but the trend has been slowly fewer sales since early May. In July and August 22, in that moment when the supply valves shut off, there were still buyer momentum. And so in this chart, you can see the weekly pending home sales. You can see the light red line of 22 stayed elevated a bit in the third quarter before really diving in September when mortgage rates jumped again. So now we're 2 years past that, and mortgage rates are still in the sevens. So there's just no real opportunity to encourage buyers. There are 381,000 single-family homes in contract across the country now. And after the end of the month closings, they're 4% fewer than were in contract last week. Last year at this time, we're pretty much exactly the same number of homes in contract. Earlier in the year, I talked about how some sales volume growth we could see in the pendings data, but that growth sure seems gone now, and it won't pick up until we see mortgage rates decline. If we finally see rates in the mid-sixes, one of the places you'll see the change will be a pickup in the new pending sales each week right here. The median price of single-family homes in the U.S. is just under $455,000. That peaked a few weeks ago and is inching down each week now for the second half of the year. $455,000 is the median price of all homes on the market across the country. It is unchanged from a year ago, 0% home price appreciation from last year. And it's basically unchanged for 2 full years. The price of the newly listed cohort is $425,000 this week. There are 71,000 homes that hit the market this week. That is actually 5% above the same week a year ago. So those homes are priced 5% above the same week a year ago. The price of the new listings is a leading indicator for future sales prices. And it's still been running 0 to 5% above 2023. So not showing any strength, but notably not falling either, has not shifted negative. For the homes going into contract, the ones getting offers each week, these are the new pendings each week. Those are priced at $395,000. The median of all those new contracts is $395,000. The price of the new contracts is what I've illustrated here. Those contracts are still 4% above last year at this time. So by this measure, home prices are up 4% year over year. And in this chart, we have 3 years of prices for this newly pending cohort. We should expect that these prices will begin to ease down for the end of the year, seasonally, starting next week. On this chart, I've highlighted the 2 points in 2022 when spiking mortgage rates spooked home buyers enough to ratchet home prices down quickly. And we don't have that dynamic now. But if mortgage rates happen to jump, then we will. So when we seek to understand whether home prices will fall in the future, it helps to think about this phenomenon they call downside stickiness in home prices. It's very easy for sellers to list their house for sale at a little premium, but the next discount is much more difficult to swallow. So that downside stickiness is why I think we're seeing obviously bigger supply with slower demand, and home prices are flattening, but they are not falling. We don't have any indicators in the data anywhere nationally to point to negative home price changes in 2024. We see flat to up a little bit. And, when we talk about the future, here's what I mean. We look to the future of home sales prices. These are sales that haven't happened yet. We see a continuation of this trend we've been talking about for weeks. So the percentage of listings that have cut their asking price from the original list price is now up to 38% of the market. That's a fairly high number. It's up 40 basis points for the week. That's indicative of demand weakness. If I'm a seller and I don't see an offer after a month or two, I opt to cut my price. So 38% is 40 basis points more than a week ago, and it's significantly more sellers with price cuts on the market now than any July of the last decade. So I had a client ask today if we should be more alarmed by this. And so my answer is that this level is notable. It's one of the indicators that shows us that home prices will be flat, but compared to the slope from 22, that's the light red line here, it shows that the market isn't grinding to a halt. The light red line here is 2022, when the market was shifting so rapidly. So it was elevated and slowing down at the same time. I suspect that in some of the country, places like Boston or even Southern California, which had surprisingly resilient years so far in the real estate market, I suspect that as inventory builds there will be some sellers who are surprised at the change. Those sellers will be overpriced, they'll not get offers, and we'll see price reductions rise in the second half of the year in some of those markets that have been hotter. So we'll see this. We're at the start of a shift in those markets, which have remained hotter in 2024. So keep your eyes on that, especially if you're in a market like New England, where you've been hearing about like Florida and Texas inventory way up, but you're watching homes in your own neighborhood like get bidding wars just like the pandemic. So it seems to me that those markets are finally shifting now. In the webinar next week, Thursday, July 18, we'll spend more time with those local markets to look at that shift. And that's why we do this data work each week. Home buyers are obviously sensitive to the cost of money, and mortgage rates stayed higher for longer than anyone anticipated this year. They haven't come down yet, but neither have home prices. So if you aren't watching the data each week, you're probably behind the curve. Your clients, your buyers and sellers need to hear the data from you. You should join us at altosresearch.com. Go to Altos and book a free consult with our team. We'll help you know how to talk about the market with your clients and prospects today. There's a link in the description below. Click that and let's get started.